Good afternoon, everyone. This is Matthew Frailey with BreakpointTrades.com. It's early afternoon, Sunday, July 2nd, and this is, of course, the very comprehensive technical review of the general markets, indexes, indicators, sectors, bonds, commodities, precious metals, and, of course, our mechanical trading systems from Breakpoint Trades. Again, I hope everyone has had a nice weekend so far. If you reside in the U.S., as you know, the U.S. markets are only open a half a day on Monday. Most people are going to be gone. It's going to be very light volume. So not expecting a lot to go on Monday. The U.S. markets are closed on Tuesday, obviously, for the U.S. holiday of the July 4th. And of course, things will get back into full swing on Wednesday. And a quick admin note, Steve Nelson is out of town visiting his mom, so he won't be back until the weekend. Anyway, let's get started here. First off, again, I'm Matthew Frailey. I'm the founder of BreakpointTrades.com. We've been doing this for over 20 years now for individual traders and professional institutions. So very highly detailed technical analysis work and, of course, systems. My forte is systems. I think I'm really good at system development, and you get a lot of that here. But one thing I want to discuss quickly, remember we've been talking about our KISS trend systems, which we've made available for everyone to look at. So from the website, breakpointtrades.com, that's 2 T's. And again, link in the description. Go to systems, go to KISS STS tables. And here is a valuable resource exclusive to Breakpoint Trades. No one else has it. I developed a KISS trend following system several years ago that is not curve fit, and you can apply it to pretty much any instrument. It's long only, but what it does is it'll go long and then it will simply raise a stop over time. And it tries to keep the stop wide enough to avoid a lot of noise. But regardless, it keeps you in an uptrend, keeps you from worrying about picking tops, etc. So when you go to this area, you'll have various tabs here. So there's the basket, there's the mega 10 stocks, the NASDAQ stocks that have been leading the market, all the S&P 500 stocks, all the NASDAQ 100 stocks, all the top 100 ETFs. Also, we have a popular section here which is the stocks that people have chosen for favorites. And if you're a subscriber, you can choose favorites by clicking on one of the stars here. And soon, probably this week, the system will automatically email you whenever there's a new smart trailing stop. Again, STS means smart trailing stop. So if you look at this on Friday, Amazon and Meta both had new smart trailing stops. 119.60 for Amazon, 264 for Meta. And GDX actually went long a first entry here. Remember, you can also click on the dynamic chart. What's cool about this chart is, you can zoom in, you can zoom out, you can pan to the left, you can look at past history, etc. Pretty cool stuff. Again, for now, this is free for everyone to use. Eventually, we will be charging for it. Okay. Let's get back to the newsletter. Again, this is our back-end newsletter recording for the website, as you can see here. This is for the standard web pages. And again, let's get started. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. Hope everyone's had a nice weekend so far. It's early Sunday afternoon, July 2nd, 2022. As I already discussed in my opening comments for the YouTube video, again, as you know, U.S. markets are only open half a day on Monday, and they are closed on Tuesday for the 4th. So probably won't see a lot of action on Monday, though it could be a little whippy because it's very thin volume. I think the market's going to decide its real course of action after Tuesday, so probably coming into Wednesday. And we'll see if the market wants to pull back or wants to keep roaring forward. And anyway, also admin note, Steve Nelson is out of town until next weekend. He's visiting his mom, who has Parkinson's, so he's helping out with that. Anyways, you can see the newsletter here divided into 9 major sections. Again, if you happen to be new to Breakpoint Trades, these weekend newsletters are extremely comprehensive, 40 to 50 minutes long. The intra-week newsletters are much shorter, at least 20 minutes shorter or so. We like to cover everything in depth on the weekend. Again, if you look here, I got a lot of text here. and I would suggest you pause the audio and read it. But again, um, you know, nothing I could, nothing a lot to say about the market. The market had a good week last week. The market has had a phenomenal rally from the October 2022 lows, where we thought there was a decent trade low there. And last week it was up strongly with the major indexes gaining anywhere from 2 to 3.7%. And all the 22 sectors, market sectors closed up except for biotech. I will say the S&P took out its recent highs, but there is now a MACD divergence there to be aware of. Seasonality wise, market tends to be very strong the first couple of weeks of July. That's stats going back to 1922. That said, that doesn't always have to play out that way. Short term, my attention here is on the VIX. Right now, I see the Bollinger Band starting to pinch on the daily chart. And whenever I see that happening, a big move's coming. And one thing I've seen a lot of times is the VIX will have a fake out move down and then a quick reversal up. So I've been watching for that early this week, see if we get that. There is some, again, MACD divergence setting up on the recent highs. As you know, this year, the 7 to 10 big cap stocks have led the market primarily. That said, we have seen a little sector rotation. Industrials made a new all-time high last week, etc. And I do think if we're going to have some sort of correction in this market, it's likely to occur sometime late July, early fall. But again, we'll see. We'll play the trend, whatever happens. And again, that's the nice thing about the KISS systems, guys. For the indexes and individual stocks, they have caught the majority of the uptrend in the FANG stocks, such as Apple, Meta, Microsoft, Nvidia, Tesla, and of course the major indexes since March. Again, the nice thing about the systems is you don't have to guess, because if the market continues to go higher and further than we imagine, markets tend to climb a wall of worry. No big deal. The KISS systems will catch the trend, but and raise their smart trailing stops, STS, along the way. But if the market decides to have a rug pull sometime, it will have you nicely protected with those STSs. Okay. Another thing to watch this week is the US dollar, 10-year and treasury yield, and 20-year bonds. Sort of at an inflection there, and that, of course, is big important for the market. Let's move on. Item number 2. So it shows you the index sector table, what transpired last week. Again, decent rally on Friday, as you can see here. Nice move for the week for the index, is up anywhere from 2% to 3.7%, with the Russell leading. As far as the 21 major market sectors we follow, every single one of them were up here except for biotech. But some nice gains here. Transports have been on fire lately. Oil services did well last week. So currencies, US dollar for the week was up 0.1%. It's in sort of a coil formation. So again, we'll track that. Cryptocurrencies were up for the week, especially Bitcoin Cash. Holy cow. But, Bitcoin itself wasn't. It had broken out the previous week out of a falling wedge. So it spent the week consolidating. And as far as commodities, for the week, crude oil was up 2.1%, but otherwise, big drawdowns in these ag areas may be good for inflation, at least at the grocery store, for food items. Corn, wheat down 15.9 to 12.8% respectively. Sugar down 5.9%. So some big pullbacks in the agriculture area. Natural gas was also down slightly. And precious metals were up. The GDX slightly led gold last week. Silver, of course, led up 1.5%. I do think this is an interesting area to watch. Seasonality wise, gold, precious metals tend to be weak from early May till early July, late June, and that has played out. July tends to be a good month for precious metals, so we'll see if that ends up being the case here. And again, we got to keep an eye on the 20-year treasury yield, 10-year. 10-year tested its downtrend line last week of a channel. That's an inflection point. If it were to break out of that, that may spook the market, but if it starts selling off again, market will like it. Next, item number 3 shows the economic news for this week. Again, markets open a half a day on Monday, closes at 12:30 Eastern, I think, closed on Tuesday. And July 5th, we begin with ADP factory orders. And of course, remember, being a new week, we have the jobs report on Friday. All right, guys, let's now move into some admin stuff and some of our mechanical trading systems. So, image below, item number 4. This shows you some of the SPY reversion to mean systems. This year, they've done well, but they did a lot less trades than last year. Last year, the SPY reversion to mean systems did something like 120 trades for SPY and ES. This year, much less, maybe a quarter of the trades. Why? Because these systems thrive in volatility when the VIX is high, and the VIX has been extremely low, as you know. So, not many trades. That's fine. The KISS systems have taken up the slack. But that said, they've still done some nice trades this year. So here's SPY. You can see we actually currently have a half position long open from the trend pullback, which you see at the top. I have 2 versions of this system. One is exits after a reversion to mean, which you see on the upper left here, over a short-term moving average. It was a nice winning trade, albeit a little one. And the one on the right holds the trade for a little bit longer. You can see it's still long. So we're still long a half position here. And if just below that is the SPY breakout, which caught the breakout condition from late May into mid-June. Okay. Again, guys, even though the systems have done a lot less trades this year, if you did the trades, you more than paid for your membership, a dozen times over. And that's the important thing. Are you making more than you're paying for your membership, even though the systems haven't done as many trades maybe if you wanted? Yes. So let's move on. Item number 5. This shows you the trades for the SPY systems this year. So it started 2023. I should start that from 1. Basically, 1 begins at the beginning of 2022. But you can see the trades this year, and you can see the open trade currently at the top, trade number 84. We still have the open half position for the SPY pullback, trend pullback. Again, guys, you can see, a couple losers here, but overall, if you took all these trades, and these are very small position sizes, $5,000 to $10,000 per ETF trade is very low for SPY. Okay, so if you just took these trades, you would have been up many times over what the membership cost. So it's just something to consider, guys, that even if you're just doing these systems and they haven't done as many trades this year, as long as you're more than paying your membership, then it's worth it. Let's move on. Now, let's talk about the KISS systems. So this is taken directly from the website, and I already just showed this in the video, but again, from the website in the systems area, when you click on it, go to KISS STS tables, and it brings you to this table with the KISS systems. The KISS systems are the opposite of reversion to mean. They're trend following. They try to hold trades for as long as possible with a rising trailing stop, smart trailing stop we call it. The reversion to mean systems simply look for a reversion to mean. The market gets stretched one way or the other, you get your reversion to mean, and they look to generally get out. So they tend to be quick trades, where the KISS systems are long trades. They try to catch trends as much as possible, months at a time if possible. So if you look here, we have the various baskets at the top, the BPT basket, and you can see on Monday, Amazon and Meta got new smart trailing stops there, and GDX went long at first position. All the indexes and all that are long. Tesla had been long from early May, but it hit its smart trailing stop last week. It closed out a very nice profit. But you can see here, you got the current percent profit, so you can see how nicely some of these are up. NVIDIA, 150% especially. Even Apple up 38%. Meta up 164% from entry. KISS system on Meta went long on November 15th. Apple went long on January 23rd. And you can see the S&P went long on March 31st. Triple Qs went long on March 15th. By the way, if you look here at the star, you can now set favorites by clicking on it. Again, you have to be a subscriber. If you're not a subscriber, you can't set favorites. And This week, hopefully, we're going to add the ability for the system to be able to send you an email. So if you set favorites, if there's a new change, such as a new smart trailing stop, the website will automatically email you and let you know. So that would be autonomous. So that's a cool feature coming. If you look, we have buttons for favorites up here, and popular it shows you the stocks that people have set as favorites, so you can see what other people are looking at. Okay, so really cool resource. Only Breakpoint Trades has this, and in this strong trending market here that we've had, the KISS systems have done fantastic, as you know. Next, image number 7. Here's the S&P. This is the indexes for the KISS systems. Again, just showing you at a glance. You can look at the 4 indexes. The S&P smart trailing stops at 4287. Triple Qs, it's 353.30. It moved up last week. And IWM and Dow, they only went long very recently in early June. They both got a third smart trailing stop last week. Next, image number 8. Here is some of those FANG stocks. Like I said, Apple up here, which has been leading the market. The current stop is 182.20. And if we get another up move, we'll see a new smart trailing stop. Meta, Nvidia, and of course Amazon. You can see the smart trailing stop jumped up slightly from 117 to 119.60. Again, guys, markets climb a wall of worry, and if the markets just continue to go much higher than we can imagine, the KISS systems will catch it and constantly raise those smart trailing stops. But if somewhere along the way, the market realizes it's a house of cards and we get a rug pull, well, the STS trailing stops will keep you protected, keep you out of a strong correction. Next, image number 9. Here's the Apple KISS system, which I already showed above. Again, the Apple system went long back here in January right here, and you could see it's raised its stop, a couple dozen times. Next, and Apple's extremely important, so let's talk about Apple first. Apple is such a bellwether waiting on the indexes, plus it tends to be a barometer of, the general public's appetite for risk. Couple things here. Again, you can see this momentum uptrend, this channel. We closed slightly above the channel on Friday. Still no real MACD divergence here. Short term, though, I added a Bollinger Band on the RSI 14, and you can see rarely does it get out of those Bollinger Bands, okay? But it's outside the Bollinger Band on Friday, along with the 14 RSI overbought. So short term, this is quite overbought here, guys. Be careful. Next. Chart 11, here's a clean 2-hour view of Apple. Just a super clean channel. Again, we're up at this upper portion of the channel. Is that an area where you want to go long? No. That's an area where, you'll look for some reversal perhaps. Again, where Apple goes, the general market usually will, so that's why we always want to watch Apple. Finally, chart 12, here's the 10-year Treasury yield. As I said, this is another item I'll be watching this week. 10-year has been rallying up since April, and it tested the downtrend channel line on Thursday, finding resistance there. This is an important flexion. So if, depending on what this does, if this were to break out of here strongly, I think the market would not take that well, okay? But if this were to sell out here strongly, then let me take that off. Sorry about that. The lines keep disappearing. So if this were to bring down strongly, instead, that would help the market further rally. So we're at an inflection point. So we got to keep an eye on this 10-year Treasury yield. Next. Chart 13, here's the VIX. This is another thing I'm going to be watching this week. Now, what stands out in the VIX here, guys, and I know some of you might be rolling your head, but we did have a divergence here last time at the VIX. But right now, take a look at these Bollinger Bands. Look at these puppies pinching. Okay. That means a bigger move's coming. Obviously, the move could be once again to the downside, but, you know, a lot of just from experience in the past when I've seen Bollinger Bands like this, it generally rallies. But a lot of times will happen is you'll get a quick thrust down and then it boom, a reversal. So this is something we got to watch for this week. Again, we'll follow the trend whatever happens, and I got to show you warnings along the way, even though the trend is obviously strongly up, but we got to keep an eye on that. All right, let's go ahead and move back to the major indexes. So image number 14, this chart shows you a quarterly chart. So each candlestick represents 3 months, 1 quarter, and for all the major indexes. And I talked about this last fall back in October, September, October. Price had fallen all the way to the middle quarterly Bollinger Bands. Long term, that tends to be big support for the market, and you can see the market indexes rallied right off those quarterly Bollinger Bands. Okay. Next, chart number 15. Here's a weekly view of the indexes with the Bollinger Bands. Dow is still overall in this pattern. You can see the uptrends on the S&P and Qs, NASDAQ, and of course, IWM has been coiling for 10 months. Next, chart number 16. Here's the daily view. Again, we had pulled back over a week ago. Where did price find support? Right at the middle Bollinger Bands 20-day moving averages, which you would expect. Next, moving on to the S&P 500. So chart number 17, here's the weekly view of the S&P. Again, you can see that trade low back in October, and we've just been uptrending since. There was a big resistance around this 42.15 area. We took that out. We took out the 61.8 fib retracement 43.25, which became support. Rallied up last week, 2.3%. And you can see, we have this channel here. So further rally, upper channel would be a target. And here's the fibs we're watching, the 76.4 fib at 42.04, 78.6 fib at 45.34. Down here, this shows you possible, can't think of the word now, cycle. So, cycles have not been perfect here, but they've called some of the bottoms and little tops here. So it's calling for a little top here sometime in July. Whether that happens or not, we'll see. This calls for a top sometime in July, early August, and then a sell off into September. Again, we'll see if that plays out or not. Next, chart number 18. Here's the weekly KISS system. Again, for the STS tables, we don't have any weekly systems there, and I may decide to add some of those. The weekly is like the daily, but they obviously give you more wiggle room, whereas the daily KISS systems, they may hit their smart trailing stop 3 or 4 or 5 times a year on the indexes. On the weekly, they could stay long sometimes a couple years at a time. But you can see even the weekly went back long there in October, actually much earlier than the daily KISS system. And you can see, again, much wider stop, 40.82. On the daily, I think the smart trailing stop is 42.50, something like that, 42.80. Here I still have it labeled DVT. If I remember, I'll change this to Smart STS. That's the old acronym. Dynamic variable trigger is what that meant. But I think smart trailing stop makes more sense for most people. Next, chart number 19. Here's a daily view of the S&P. Again, this shows you some of these wave counts. We've been calling for this wave move up, and wave 3 would be your super bullish view, or there's some other counts. And you can see that pullback we had back to the 20-day moving average. You see how it found support also basically at those off the August highs, which was previous resistance, became support. Just beautiful technical analysis. Now, short term, as I talked about in my opening comments, here's a little concern of mine. There is some, not just an RSI divergence, you have a MACD negative divergence setting up here. Again, this could be negated. Divergence on itself is not a sell signal, but it is something to be aware of. We have a MACD divergence, something we haven't had in the market in a long time. We've had little RSI divergences, but we haven't had MACD divergences. Okay. Otherwise, this shows you a channel, so possible target if we just continue to ramp. Next, chart 20. Here's another daily chart with a bunch of the confluence of trend lines. Again, we bounced off this area, which was previous resistance, became support, as well as some of these channel lines. You can see the upper channel line and supply zone up here could be a target, just up over 4,500. Again, watch the RSI and of course MACD divergence next week. Next, chart 21. Here's a zoomed in daily view. Again, we made a slight high on Friday, taking out that recent June high. We do have MACD lagging at the moment. Next, chart 22. Here's the KISS trends system. So again, smart trailing stop still pretty wide, 2287, but much tighter than the weekly, which is down there below 4100. Next, chart 23. Here's the 4 time frames. Not a lot to say here. We did have some amateur buying late on Friday. See the A here, and last week we bounced off that bullish pullback. We're above the ATR in all these time frames. Next, chart 24, moving out of the intraday charts. Here's a 2-hour view. Again, we pulled off that channel the week ago, pulled back to the middle of the channel and rallied up. We do have, notice how the MACD is lagging on this move. Next, chart 25, here's a 2-hour view, shows you the same thing. Next, chart 26, here's a 60-minute view, this wave count. And so far, this is playing out, guys. I talked about back there in mid-June when we started pulling back, I talked about that we favored that as a wave 4. Go back and listen to those newsletters. That ended up playing out. We made a new high last week. So we're working on this 5. Okay. Now this could be simply a wave 5 of 3, perhaps. All right. But something to watch for. Next, chart 77, here's a 30-minute chart. We also were showing a falling wedge last week into that support, and we rallied out of that. Finally, chart 28, here's a 15-minute view. And we do have a little MACD divergence on this time frame. Again, we'll see what market does on Monday, but more importantly on Wednesday when everyone comes back. Next, moving on to the triple Qs, chart 29, weekly view of the Qs up 1.9%. Again, they've been the epitome of strength this year. This is clearly some sort of wave 3. As you can see here, like a 1, 2, 3. So eventually due for a 4th wave, consolidation, then another move up. And you can see we've basically made it to that, pretty close to that 78.6 fib. Next, chart 30, here's the daily view. Again, price was essentially going parabolic, but that pullback bounced right off that 20-day moving average. Now, unlike the S&P, this has not taken out that June high there. If it does, we're going to have MACD divergence, so be aware of that. Next, chart 31, here's the daily KISS system. Again, still long, 353.30 is your smart trailing stop. System went long back there in March. Next, chart 32, here's the 4 time frames. Only thing to note here, the half day, we're right up against that ATR there. Watch that. Again, we bounced right off that bullish pullback late last week. Next, chart 33, here's a 30-minute chart. You can see how this pattern played out for a break to the upside. Next, chart 34, here's the Dow. But haven't shown this for a while. Remember, Dow's only 30 stocks. Here back in May, I drew this potential little inverse head and shoulder pattern, but we did break out of that wedge. You have a higher low here, which would be a good place for a stop. Next, chart 35, IWM, the small caps, they've been lagging this year overall. Therefore, they continue to flesh out this large coil. Next, chart 36, here's the daily view. And again, you could see the coil here, A, B, C, D, E. We correctly called for a move up in this wave E way back here in April, May. So now this still looks like it may have more room. So this little pullback, we added some wave count here. Remember, this is subjective a little bit. So wave 4, looking for another move up in a wave 5, wave C, wave E, whatever, up into this area. So that may be an area to watch. Next, chart 37, here's a 30-minute view, up near some resistance. So that does it for the indexes, guys. Again, we'll see what overall happens this week, and let's move on. Let's look at some of these market indicators. Chart 38, here's the VIX. Remember, I talked about the pinching Bollinger Bands here. We gotta respect that and watch that closely. A big move's coming, and remember, we could also see a quick fake out to the downside and then reversal up. I've seen that happen. Next, chart 39, here's a 5-minute chart of the VIX. And you can see late Friday, a lot of you may have been gone, the VIX had a big spike up the last 5 minutes. Next, chart 40, here's another daily chart of the VIX. What could be forming over time is a wedge. Next, chart 41, here's a 60-minute view of the VIX, just still in this channel I've been showing, hasn't broken out of it, something to watch, monitor over time. Next, chart 42, here's the VIX and the VVIX. So the VVIX is near its lower Bollinger Bands. Again, we want to watch both of these areas coming this week. Finally, chart 43, here's the UVXY ETF. It's one of the VIX ETFs. So if the VIX does try to bounce, this is one way to play it. If you don't want to play VIX futures, little tight channel here to monitor for a trigger. Next, chart 44, here's the NYSI McClellan oscillator, plotted with a 5-3 stochastic. You can use these as general buy and sell signals. So here, still watching for a sell signal. Haven't gotten one. I need to move below one of these candles on the NYSI. You can see the last buy signal there in May. Overall, pretty simple system. Next, chart 45, here's the S&P 500 with the 10-day NYAD. Now, guys, here's another little warning short term. Notice the divergences on the NYAD. And again, you never know how long the divergences will be. They could be a couple weeks, 3 weeks, a month, or whatever. But whenever you have a lower high on the NYAD, but you're making higher high on the S&P, that's a warning, so be aware of that. Again, it can be negated, but it is there, and that keeps me a little cautious short term. Next, chart 46, here's the NYAD, advanced decline with Bollinger Bands. We closed outside the Bollinger Bands, so short term market is obviously a little overbought. Next, chart 47, here's the bullish percent index system, BPSPX. Your buy signals occur whenever you cross over these moving averages, or sell signals as well. And you can see these buy signals have been worked out pretty well. Next, chart 48. Here's something that's concerning, and it shows you the problem with the NASDAQ area, especially about those 10 stocks that have been leading. The NASI histogram is still negative. Generally, when the market's going up, this is positive. You can see it had it went positive there in January as more things were moving. But with all this rally, it still hasn't went above zero. That tells you how narrow that breadth is on that NASDAQ. Next, chart 49. Here's the NASI back in 2020. So we're uptrending, and you can see, again, it took, after that big February, March decline, it didn't go positive until April, but it went positive and it stayed during the uptrend. Then it went negative on the pullback, went back positive. That's generally how the NASI works when you have broad participation, but you don't have that right now, and that should be a concern longer term. Again, it doesn't mean you go out there and sell everything, guys. You can stay long with the KISS systems, but you keep that in the back of your mind. Next, moving on to the sectors, chart 50. Here's for the sectors with the KISS systems, the XLK, semiconductors, XLC, and of course transports. They got a new smart trailing stop on Friday, moving up from 233 to 239.60. Next, let's go and look at the market sectors briefly. Here's XLK Technology. They made basically a new high in mid-June, pulled back, bounced off the 20-day moving average. Next, Jabber 52, here's XLC Communications. Again, just in a steep uptrend channel. Remember, these two sectors represent those Magnificent Seven type stocks like Apple and Meta. Next, Jabber 53, XLF Financials. They started to bounce here late last week. We'll see what they do. Next, Jabber 54, banks bouncing a little bit, but still really struggling overall, as you can see, right up near this broken channel line. Next, Jabber 55, transports. We identified this bull flag a week ago. That played out beautifully. Next, Jabber 56, here's a zoomed out view, kind of breaking out of a big ascending triangle. Next, Jabber 57, jets. So we had also put out some long ideas in the airline area because of the look of the transports, and these obviously played out very well. Jets ETF, Jabber 58, American Airlines, same deal. This was a long idea back in early June. Nice move. Next, Jabber 59, home builders. What can I say? Up, up, and away, just going parabolic. Just crazy with interest rates where they are. But, that means a lot of people don't want to sell and lose their, 2.5% and 3% mortgage rates they established a couple of years ago. But this just keeps zooming higher. Next, Jabber 60, healthcare, breaking a little trend line here out of a coil. Next, Jabber 61, utilities, pulling back in this larger coil, but a little channel inside the coil. This will likely move with the 10-year and TLT bonds, so watch that this week, as I already stated. Next, Jabber 62, XLB materials broke out of a little channel here, looks strong. Next, Jabber 63, airlines. I meant to have this up with the transports, so got out of order, but you can see how strong that area has been. Next, and the epitome of strength, Jabber 64, industrials. While we look at the XLK, look at industrials. Broke out to a new all-time high. Remember I pointed out this coil about a month ago, back there in May, and boy, this has played out. No bear market there. Next, Jabber 65, industrials on the daily. Again, they broke out of that channel back in May and just been up, 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 and away. Next, Jabber 69, energy. This is an area to now monitor. As you know, it's lagged this year. It was the leader last year. This year, it has been the laggard. It is coiling here, so let's see what this puppy does. Next, Jabber 67, there's the daily view, still stuck in this range. Next, Jabber 68, oil services, weekly chart. And you can see, I pointed this out a good month ago. It had came to this demand zone. It held this long-term uptrend line, bounced off the demand zone. And we'll see if it can overall rally back, maybe get into the supply zone. That's a ways up. If you own some oil stocks, you would do well if it gets up to that area. You also have a little trend line break in the RSI here. Next, Jabber 69, oil services on the daily. They broke out last week. They're leading over XLE energy. I have some trade ideas in this sector below. In the trade ideas, we'll get to that later. Jabber 70, here's the bullish percent energy index. Remember this one on a buy signal back there in early June when this crossed up over the moving average here, this 20-day moving average, bullish percent chart. Next, moving on to commodities, Jabber 71, DBC. Overall, DBC was down last week, 0.9%. It's still overall in this big downtrend wedge type pattern, still holding this 200-week moving average. Next, Jabber 72, there's the daily view. Again, you can see the wedge here. We rallied off the wedge back in May. We found resistance at the top of the wedge a week ago. So we're still in this pattern. Next, Jabber 73, crude oil, up 2% for the week, but still just noise within this little pattern around the 200-week moving average. Next, Jabber 74, there's the daily chart. Just chopping around here below the 200-day moving average, still in this little pattern. Next, Jabber 75, natural gas, was down for the week, but had a nice rally on Friday. Again, I like this overall base. I own some Boyle ETF. But we'll see if it can break out of this area. Next, Chart 76 DBA. This had a nice pop rally in June, but got to its symmetry target and has pulled all the way back. Notice where the pullback found support at that trend line channel where it found support. That was a good area to attempt another long. Next, moving on, let's talk about interest rates. So again, we got to keep an eye on the interest rates here, guys. The 10-year, as I already discussed in the opening comments, this tagged its upper channel line on last week on Friday and Thursday. Find resistance there. This is an inflection point, okay? You know, if this eventually breaks out of here, market is not going to like that. I'm sorry. But if it were to have another big sell-off here, I think that could extend the market rally quite a bit. So this is something we got to watch. Next, chart 78, here's the yield curve. Now, boy, the yield curve keeps getting worse. Look at this, just keeps diving. It is now below, 1987 levels. So this continues to get weaker and weaker and weaker. Next, chart 79, here's the TLT 20-year bonds. Again, just like rates, we keep an eye on this, the bond that's been moving sideways in this channel. Next, chart 80, here's the daily version. Okay, moving on. Let's talk about Bitcoin, chart 81. Bitcoin, again, Bitcoin had popped out the previous week out of this falling wedge. Since then, it's been consolidating, could be forming a bull flag at the 9 EMA. Next, chart 82, there's the weekly version of Bitcoin. One reason for the big rally this year is this weekly falling wedge we pointed out back there late last year. One target on a continued move would be the 38% fib retracement up here. Next, chart 83, Mara. Again, this was a one way to play Bitcoin, one of some of these stocks. I said if Mara, once it broke out of this range, you'd have a big move, and that's exactly what happened. Next, chart 84, MSTR was another one. Broke out of this pattern, pulled back, found support here, and rallied back. This area still looks good if the market holds up. Potential flags and stuff. Next, chart 85, US dollar. Overall, in this kind of big coil-like pattern, it's basically in the middle of the range here. Next, moving to precious metals. Chart 86, gold. So gold, as you know, tested the upper resistance here back in late April, and we were looking for a pullback consolidation, and that's exactly what's happened. Plus, gold, seasonality-wise, it's also played out according to, because seasonality-wise, gold historically is weak from early May to late June, and that's exactly what has happened. Now we'll see if it can form a higher low and start moving up again. This is obviously whatever the 10-year does, and the Australian dollar is going to affect this. Next, chart 87, here's the daily view. Again, the bullish view is you have an ABC here. Whether the C is complete yet, we're not sure, but it is bouncing from the support zone. You have two fibs here, 38% fib and 61 fib from the November lows and from the February highs. So we did bounce here. We had some RSI divergence. We haven't broken this RSI trend line, but it does look interesting. Next, chart 88, here's another daily chart of gold. This one has the GDX GLD ratio. Remember, the stocks lead, so you want to see what the stocks are doing. The stocks led a little bit last week, but you want to see a strong break of this trend line. Next, chart 89, there's the monthly big picture view of gold. Remember, I talked about this back in April, that this would likely be a wave 1 of this 5, and we're going to have a wave 2 pullback. So overall, that's been playing out. Whether or not the wave 2 is done or not, we don't know. But if this is the correct pattern, we could see gold eventually rally up in that wave 3 of 5 to new all-time highs. Next, chart 90, there's the ETF, GLD, same analysis applies. Again, bounced off this little support. There is an open gap here we never filled, so if this goes down again, I'd be targeting this gap, okay? And watch this trend line on the RSI. Next, chart 91, here's a 2-hour chart. One thing to watch, guys, so from the early May highs, here's your symmetry. Largest bounce was about 4 points. So we need to exceed symmetry to confirm a new uptrend. Okay. Next, chart 92, silver. Again, silver was a great long down here in this demand zone, which we talked about last year. Otherwise, it's been in this choppy uptrend channel since. Next, chart 93. Here's the daily chart. Again, pulled back to the 200-day moving average. Now, this wave count, we'll see. If we have another move down, this will likely be wave 5 of C. Okay, whether that happens or not, we'll see, but something to watch for. Next, chart 94, SLV is the silver ETF, way to play silver. Next, chart 95, GDX. GDX bounced on Thursday and Friday, as you can see, closing over the 9 EMA. That's a positive. Okay. There is an open gap on GDX, which we did not fill, so that's still a concern of mine if we go down again. But we did close over the 9 EMA. That's a positive. We closed over this RSI trend line. We're still in the channel. Again, if you're long here, you want to maybe put a stop at Thursday's lows. Next, chart 96, there's another chart of GDX with the GDX GLD ratio trend line. Really, still not a confident break of that trend line there yet. Again, nice move on Thursday and Friday, but we need to see more evidence. Next, chart 97, here's a 2-hour view. Just like on gold, okay, you want to see a break in symmetry. So we need to see a move up off the lows exceed $2.20. So far, we haven't gotten that. A lot of times, the best thing to do instead of picking bottoms is to allow a symmetry break and then buy your higher low. Okay. Next, chart 98, GDX KISS system went long on Friday. Its smart trailing stop is right there at Thursday's low. So logical area for it to put that stop. Whether this plays out or not, we'll see, but that's where the stop is. You could see it was long there in March, and it stopped out there in May. So it did a good job there, and it got back in. Next, chart 99, GDXJ. Again, similar to GDX. Similar look here. Next, chart 100, SIL, silver miner ETF. Here you have a potential 5 waves down. Again, similar look to the other things. Again, you had MACD divergence on this. It's trying to break, it's breaking this RSI trend line. It's trying to break the ratio. You had a divergence down here. This looks pretty decent. Again, we want to see follow through, but we do have a nice little move there. Next, some of the individual stocks, chart 101, RGLD in the gold area. I liked it down here in this supply zone or demand zone, bouncing over the 9 EMA. MACD's crossed up. Ratio is breaking. So this looks decent. I own some of this one. Next, chart 102, AEM. Here's another one. Wedge into the 200-day moving average, bouncing up. Next, chart 103, FNV, another major gold stock. Channel held that 200-day moving average, lost it, then recovered it, closed right at the 20-day moving average on the channel. The trend line and the ratio is broken confidently. Next, chart 104, AG, Majestic Silver. Here's a kind of a cheaper one, silver stock. You know, if this area has bottomed, this is obviously had a really nice correction. So lower risk area. Next, chart 105, pause. That's another silver stock. You have 5 potential waves down, a wedge with MACD divergence. Finally, chart 106, EXK. Here's a cheap one. It's another little silver stock into this demand zone. You can see it's trying to find support. One could be long here at the stop just below Friday's lows. Oh, and the final one, for you real cheap guys, load, Comstock Mining. You have potential ABC pullback on lighter volume. Again, it's 70 something cents, but you know, if you want a cheapie, there you go. All right, guys, that does it for the gold stocks. Let's move on to other trade ideas. So following up on some trade ideas from last week, here's Google. This had a falling wedge into the 50-day moving average. We said it looked like a bounce trade there. So far it has, but not a huge move yet. Again, your stop should be in place. Next, chart 109, DO, Diamond Offshore. So oil type stock, driller. coil pattern. It took a while to get going, but finally started moving if you had patience. Big move on Friday. Congrats for those of you who bought this. Looks good. Trail those stops up now. Next, Jarbor 110 RMTI. Breaking out of a coil here on big volume. This was a trade idea of ours. Nice trade on Friday. I put this out on Monday, so you had plenty of time to see it. I put this out on Wednesday, I'm sorry. So you had plenty of time to see this, guys. Next, Jarbor 101, 111 IONQ, another one that busted out big last week. Next, Jarbor 112 SES was a long idea I put out a week ago in this little tight channel. Broke out, moved up, stalling a little bit near resistance, but overall still looks okay. Next, Jarbor 113 AOS was a breakout idea from Monday, played out so far last week over that breakout of 71. Next, Jarbor 114 IDXX, been a long on the watch list, broke out on Friday. Next, Jarbor 115 Carvana broke out of this flag. We also liked it back there in May out of the coil. Next, Jarbor 116 Sound. This is one of those AI type stocks. It's been marching up, holding that 9 EMA. Next, Jarbor 117 ATEC played out nicely from that trend line break, cup and handle pattern. Next, Jarbor 118 LRCX. That coil played out last week, as you can see. Next, Jarbor 119 MDXG, another one long idea that continues to work. Next, Jarbor 120 UNM was a long idea last week on Monday, broke out over this resistance trend line, it's moved up nicely. Next, Jarbor 121 CLSK, still monitoring this one within this big coil. Next, Jarbor 122 ADMP. This is a cheap stock. We liked it inside this channel, in the middle of the channel there around the 225 area, gave a nice trade. Still overall hasn't broken out strongly. Next, Jarbor 123 CPRT was a breakout idea over the 90 area. Nice little trade, but we do have some active divergence setting up here. Be aware of that. Jarbor 124 TMC, this flag's playing out so far. Next, looking at some new ideas, Jarbor 125 BITF, this is a Bitcoin type stock. It is coiling, as you can see. Look at those volume patterns in the coil. Next, Jarbor 126 NOV, here's an oil stock, kind of a nice base here forming if the oils run. Next, Jarbor 127 rig, boom, nice big break out of here. As you can see, this stock is highly shorted, so there is potential for a short covering run if this gets going. Nice volume on Friday. Next, 128 WRB. Here's a little base setting up, resistance over the 60 area. Next, Jarbor 129 9. Here's another energy play. By the way, we had this as a long idea back in early October last year. The thing ran from the $3 range all the way up to 17. You can see we trailed the stop up all the way. But anyway, it has a nice base forming here, some volume coming back into it. So moving average ribbon is pinched to hell, trying to curl up. So if the energy area runs, this could be a lower risk long. Next, Jarbor 130 ALB. Here's a new one, kind of a little flag channel into the 20-day moving average. Next, Jarbor 131 ELAN. Here's a tight little coil to watch. Again, guys, and remember, there's some other trade idea setups above in the precious metal area and that UVXY for the VIX. All right, guys, enjoy the rest of your Sunday afternoon. Have a great 4th of July. By the way, I'm not going to put out a newsletter on Monday's half day, so I'm going to take that day off. And I'll see you guys all again on Wednesday. I will be around on Monday, though. So take care, everyone. Have a good evening.